folks, and welcome to another daily Bitcoin market analysis by Inspocrypto. Friday, I have mentioned I'm going to provide such kind of a series of, to start historically when everything have started to become to go in the wrong direction. I'm talking about the banking sector, financial sector, including crypto, because it's the same. Of course, not that old, but it's the same. It's the same money. You can say and tell whatever you want, but it's the same money. When you have 20 million Bitcoins, and you know that almost 25% of these 20 million Bitcoins are in hands of few who started to buy them in 2018, 2019, and even they distributed a lot, but they still, it's the same money. And you can tell whatever you want. You can place more stupid comments below of my videos or on Twitter. It's fine for me. You are just wasting your time, because I'm just going to ban you, just to block you or whatever, because, it's also, I don't want to waste my time. However, I would like to start with the current example, because it demonstrates once again that this picture that I described so many times of this ship that pushed up before it sinks and disappear from the surface of the water is what's happening. And people are, once again, like they did in 2021, laughing at me. The Inspo perma-bear. He is always bearish. And you are useless. Your analysis are absolutely useless, they say. And yeah, I would laugh. I hope, I really hope I'm absolutely wrong and all my analysis are useless and my knowledge is absolutely useless, because you are brilliant. You are brilliant. Yes, we see green candles and we buy. You mortgage your house. Sell everything, every single fund you have out there and buy. Because it's the time to buy the dip. It's always the time to buy the dip when the price goes down. And it doesn't look that bad. I mean, on Bitcoin from almost 15 whatever, we did 100%. That's bullish, guys. Go for it and buy as much as you can. Don't cry later. And don't say nobody warned you. And not alone about crypto, in general about all markets, equities. In general, we can talk about equities. And, the problem is not the market itself. It's the environment. It's liquidity. Follow the flows is the slogan of Phoenicia. Follow the flows, the money flows. Why is that important? Because you can say you wish 100 Bitcoins, but if you don't have the liquidity, it will always be just a wish. You need the money. And when we are talking about hundreds of millions or even 50, 60 millions, usually a bank is involved. Directly or indirectly, but it's always involved. Or in insurance, but such kind of institution, it's always behind. So the money is always coming from the same source. It is what it is. If you like it or not, I don't care. And the Fed don't care. And many others don't care. Even the institutionals don't care. I will show you that they don't care. They don't care about your deposits or whatever. And you know that I would say I'm a very honest person. I could just say crypto is bad and shit and the banking sector is doing well, because at least these guys are paying my monthly bills. It's not crypto, these guys. But we are not here to shill. We are not here to be dishonest. Dishonest means in crypto or in the banking sector, financial conditions in general. We are here to make a good discussion. I would like to share my experience and my knowledge with you. You can use it or you can leave it and say, I don't care. The money is pushing up. I will jump in. I will buy my next Lamborghini. It's up to you. You can do it. You know, when people are saying, you are not even trading. I don't trust someone that's not trading. You are stupid with such a comment. I was trading all the time. I just stopped to trade. And I have mentioned so many times why I did. So if you think, I need to trade always, good luck. We will talk about that in a few years. How successful you were. But that's another thing. So let us talk a little bit about the banking sector. Because the Fed is doing what it seems, they know, or it's their best performance. It's the best they can do. Rebalancing and supporting the banking sector. And they don't care if the money that they are taking is to support their customers or just to pump just a little bit more to the markets. A market that is artificially, and not only crypto, pushing up, trapping more retails. I've warned so many times and people don't care. And I don't care. I will not care in the future as well. So if we take a look, the US has a big problem at the moment. We don't have the same problem in Germany, at least. I think in Europe it even looks better. But Bloomberg was sharing a very interesting chart. That was the US bank deposits. And they are showing that since March last year, the deposits on US banks are declining. Recently, since February, even sharply. They dropped really sharply. And, you know, usually when you are noticing that, if you are noticing a transition to a bank run, usually, and that's the main goal and function of central bank, or at least it should be, is to protect the interest of retail. So to say, hey bank, we know you need liquidity. So to protect the deposits of your customers, if you need some liquidity, we can offer different options. So we know, for example, one option was the discount window loans. You remember? That was in March when they pushed up by almost 160 billion within just, I don't know, that was a few days or something after Silicon Valley Bank and Signature and, you know, some what a coincidence, some banks related to crypto. Well, they just said, the banks, holy shit, we have another source to get liquidity. So of course, when the money is there, even if it's not cheap, because they are paying, I don't know, 5% right now, they said, yeah, we will take it. We take it. We will pay it back, no problem, but we take it. We need the money. Usually you would say, okay, that's great. You are a professional. You know that your business works only if the retail deposits money on your accounts and will stay as a customer. That's a great thing. I love that. But the problem is they use the discount window loans, but they still have some problems, bigger problems, and they need even more liquidity. the question is why? Why is that happening? How is that possible? And I mean, the money is not for less. I mean, they need to pay. And of course, the question is, what's your purpose? What are you doing with this money? I mean, well, I think it's gambling money. That's what they are pushing. That's what they are using to pushing up the markets. But of course, they need to be good. Because if something goes wrong, then you have two problems. Your clients on one part, because they have unprotected deposits. Then you have a lot of loans. Yeah, even it's via the discount window loan, but you need to pay them back. In relatively, it depends what kind of loan you have used, but usually in 1 year, 2 years or something, you need to pay that back. So it's not easy, taking into account the current market conditions, because everything looks fine. But only because the sun is shining doesn't mean that in 30 minutes it can rain again. Because we know that that's usually also happening close before a tornado. So, banks are not stupid. They are not stupid. Yeah, they are not flexible, but I wouldn't say they are stupid. They know exactly how it works. And while they are keep yelling and crying, we need more liquidity because, our clients are taking out the deposits and we need the liquidity. Of course, who is listening? Yes, the Fed. So the Fed starts to think, and what can we do to support these banks? It seems discount window loans didn't work that well. Yeah, they used the opportunity, but something, it's too costly. That brings more pressure to them. So we need to rethink it. And of course, they are so creative that they said, Bank Term Funding Program. What a name. Bank Term Funding Program. Now some people should say, what? What is that? Well, let me just read. The Federal Reserve Board on March 12, 2023 announced the creation of a new bank term funding program, so it's relatively new. The BTFP offers loans of up to 1 year in length to banks, savings associations, credit unions, and other depository institutions pledging U.S. Treasuries, agency debt, mortgage-backed securities, and other qualifying assets as collateral. These assets will be valued at par. Oh, that's crazy. No fees, no anything. A better rate than, of course, just if you know what will be the next word, of course, better than the discount window loans. But what is the purpose of such a program? Well, usually to provide liquidity to U.S. depository institutions, each Federal Reserve Bank would make advances to borrowers taking as collateral certain types of securities. For what? To protect the deposits of their customers. That's the goal. The rate is fixed, and that's beautiful because the rate is just in terms of 1 year overnight index swap rate plus 10 basis points. The rate is fixed. And that's beautiful. Just imagine someone would just give you the opportunity. You can use, some collateral, your house, for example, and he will give you a credit with fixed interest rates in a situation where you know that the interest rate will change. At least, even the Fed is saying, we will pause. I think Yellen did or mentioned something like that. However, why is that a problem? Well, first of all, I would say that's not a problem. It's not a problem if you are using such kind of program for the purpose why it's existing. To use that, use your collateral. Yeah, you can use your US Treasuries. Oh, Tether has a lot of US Treasuries, but they are not a bank and not member of the Fed. At least that's what we think and know, but nobody knows anything about that. But imagine they would have access to the federal system. Woohoo! That would be great, to the moon just tomorrow. However, they can use US Treasuries and other kind of secured or very, very secured assets to borrow money under this program. And now, the most funny thing. They are using the new program loans. And that's the whole story. I mean, that's so stupid, but it works always. It works. Cheap money. Cheap money is the key. Do you have cheap money? Gambling. Yeah, baby. It's like, you have a lot of $100 notes as a belt, and then, some, ladies, whatever, dancing, and it's exactly the same shit. It's really exactly the same shit. They are using BTFP loans to pay their discount window loans. Isn't that great? Less interest, fixed, and they can use their US Treasuries as collateral. But nobody is telling them, hey, you need then to use this liquidity to protect the deposits of your customers. They are not doing it. Nobody is forcing them. It should be the case, because that's the purpose and the goal of such a program. But nobody cares. So if you want a little bit more cheap money to protect your benefits, your gain, I can tell you the interest rate is fixed. And you don't need to sell all your US Treasuries, because of course it wouldn't be in our interest that you start to sell your US Treasuries. Instead, you can use them as collateral. You remember who is doing exactly the same? You remember the program I have introduced you in? You remember that? Where even foreign central banks can use their US Treasury as collateral and they get liquidity for that? Do you see the connection? They are doing exactly the same with the banks now. Exactly the same. They don't care about the deposits of their clients. But follow the flow. Follow the flows. That's the key. They are using any kind of opportunity to be sure that no one is going to sell US Treasuries, because that could be a big, big pain for the US. They know that exactly. Instead, they are building a big, big construction of the Western nations to force them to use their US Treasuries and to buy even more US Treasuries instead of gold, for example, because they can use them as collateral and receive just liquidity from the Fed. US dollars, of course, US dollars. I have mentioned that that is part of a political agenda, because we are hitting a currency war. Why many currencies will be backed by gold and others by US Treasuries. That's you can have gold, US Treasuries. So, but the funny thing is they are using now the same with banks. And banks are using them to pay, my beautiful gambling budget I have used while receiving loans via the discount window loans and now using the BTFP loans, but it's exactly the same crap. Just to give you an example, discount window, in 1 week they paid 18 billions back. In the last 3 weeks it was 83 billions back from the peak of 153 billions they received. The bank term funding program has new fans, a lot of new fans. In 1 week, 15 billions, remember, 18 billions discount window, 15 billions bank term funding program, and 79 billions in 3 weeks versus 83 billions they paid back from the discount window loans. Okay, I don't need to be an Einstein to say, it's very similar. Yeah, it is similar. And it's easy to explain you why it's similar. Because it's the same. They are just using one source to prepay the other, to pay back the other, and to keep doing what they do, but not protecting your deposits. And usually that works fine. That works fine because what they are doing, I mean, if you want to be fine with that money, usually you take a credit to invest that money, to make more money with that, right? That's the best case. If you get 100 billion and you can make 120 billion, wow, you are the king. You can pay back the 100 billion with some interest, 5% per year or whatever, and the gap is yours. That's your gain. That would be great. And maybe you will have such a kind of buffer just in case of something goes wrong and you need some liquidity. But it's not the case. Yes, they are gambling. Yes, they are making short-term profit with that money. Not that much. But yes, that's what they are doing. And that's why the markets are pushing up more moment. Because we are reaching a peak. Means, we need to buy more US treasuries, but wait, it doesn't count. So even if you buy more US treasuries, you can't use them as collateral for BTFP loans. I mean, the Fed is stupid, but not, well, it's retarded, but not an idiot. So they are saying, in case of they start to buy US treasuries to get more liquidity in a fixed interest rate, that could be the help. Now for the markets, you can imagine artificially pumping more money. So, of course, some people would say, but Inspo, they are using them also for loans. What loans? Retailer loans? Really? What kinds of retailer loans? Did you check the last data? I mean, retail, for what should be the retail get loans? To pay their interest of their loans? That wouldn't be a good idea. Because to get a loan, to pay another loan, it's usually not a good idea. Only if you have plan B. Plan B means you have a good job, you can make even more money, and that's it. That would be amazing. But if you don't have it, this money is in a risk. And of course, we are getting more regulation also related to credit and to loans. So it's not easy to get a loan anymore. And if you come and say, yeah, I have debts, I need a loan to pay all my debts, the bank should say, only if you have a nice collateral. You don't have, then it's not cool. Well, at the same time, we know as well that, for example, retail sales fall more than expected in March. They didn't expect that. So if we take a look, where we receive, for example, a lot of negative changes in retail consumption, for example, we see, for example, in 2022 was a half for electronics and appliance stores. It's incredibly bad. In the monthly, general merchandise stores, building materials, okay, building, real estate, it's looking absolutely, but crossover, almost everything, furniture, home furnishing, motor vehicle and parts, clothing and accessories and whatever. The only thing that still works well is health and personal care, non-store retailers, and of course some food. But just in the yearly view, if you check the monthly one, even in March, it declined by 1%. It's not cool at all. And I mean electronics and appliance stores, 10% in 2022. Jesus, that hurts. So for what exactly should retail get loans? For what? They are consuming less. Why are they consuming less? Are they unfair? Or are they just in debt? And yes, once again, the ship that is sinking push up before it disappears. And that's what's happening. That's what's happening since a while. And crypto, if you like it or not, it's part of it because the money comes. You know, when a tsunami starts to form its strength, usually it sucks the whole water from the coast. And people will say, look, that's beautiful. Now we can walk there, where usually it's water, without to think that the next 30 meters high wave is hitting to your face. And usually when that happens, it's too late when you are noticing that's a trap. And it's a trap. Well, crypto is a little bit different because crypto is really just in hands of few, really few. I mean, we can talk once again about Tether, and I really don't like to talk always about Tether because I don't care about Tether that much. You know that I don't like Tether at all. But, and thank you very much. I really was noticing that just a few hours ago, Bad Bunny. So, Alvaro, thank you very much for this tweet. Paulo, why not? Wow, 16. Oh, I don't know. I mean, do you understand that? Oh, yeah, I guess. Oh, let us go here. A bot, a cloud, a plug, a shape. What the hell? What he is talking about? Do you know that? Is he talking to you? Green for up, red for down? Is that crypto? Is that crypto? Jesus. And I mean, I have mentioned so many times, I love the technology behind, and we don't need, oh, here, my lovely sentence. You can ignore the tsunami, but the tsunami will not ignore you. Yeah, and that's true. He is right, this guy. However, it seems that's part of the crypto space, of the crypto market. While now the US government, once again, they are working on the next stablecoin bill, and some of the details that are coming out talking about if a stablecoin is not backed by a hard asset like fiat. They are not talking about US treasuries, something that it was wondering me a little bit. Why not US treasuries? I mean, if banks can use US treasuries as a collateral to get US dollars, why need a stablecoin to be backed by USD? They are not mentioning US treasuries. They are even saying if a stablecoin is not backed by US dollar, it will be banned for 2 years. I really thought, why? Why making this kind of separation? Why are you allowing banks to use their US treasuries as collateral? And why are you saying to stablecoin providers that they need fiat? why we all know that it's not that easy. I mean, if banks have liquidity problems, you know, it's going to be really hard. But it is what it is. And the question is, if they are really going to publish such a bill, what will happen with the crypto market? As this crypto market could be a lot, or could be very transparent, because we have on-chain. It seems recently it doesn't work at all, but it is transparent. It's really transparent. And that's what I love. Not only the technology behind, mainly on Bitcoin, for example, but it works and it's fine. It should be part of our future, and it will be part of our future. And the only thing, and that's the problem, the whole environment, our environment, will change. And even all these advantages will not be that big anymore. Not for us. However, 31 minutes, it's time to change. And to go forward and to talk about what's going to happen, what on-chain data is showing us, if we can see anything useful to us. But, you know, I have said so many times, and people need to understand that a market, you can't push up a market with wish thinking or praying, only with money. And when money is coming in with low volume, you should ask what's behind. If you don't and just following the price, good luck. So let us take a look to the weights ratio 1 day time frame. Yeah, as you can see, it lifted up Sunday. It's declining right now a little bit. So the weights ratio 30 days moving average lifting up once again. I'm just saying it without any kind of interpretation because, everything changed a lot. And while usually the weights ratio, when it starts to decline, it's where it takes action and usually the price should go down. It wasn't the case here. Just twice, once here, but to be honest, if we take a look, usually the weights ratio should decline even more. One comment, and that's something I had in mind, is of course the weights ratio is a ratio, even if it's only about spot. But what happens when wash trading was having just an effect to the weights ratio impact? That's something I had in mind, but it's almost impossible to know if that's the case or not, to be honest. Because usually bots are using, lower amounts to trade. So usually their retail amount should be bigger than the weights amount. But I don't really know why the weights ratio. I mean, the only argument I have why the weights ratio is not having the effect as expected is pure distribution. That's a distribution. And yes, we can't see that in other phases because as said, the market has changed. Not only this market, but markets have changed. And every time when something changed, it will have, of course, an effect to many different indicators. So still the only indicator we have is follow the flows. It's really to see where the money is coming from. But there is the problem. That's not the most transparent part of crypto, unfortunately. If we could have a bigger insight to that, that would be much better. But it's not the case. However, under normal circumstances, I would say someone is here preparing once again a bigger sell pressure, but that's what they did just before and nothing happened. Now, under the current conditions, without any kind of wash trading, we will see if that will play out as we know it. If we take a look to the weights ratio 1 hour time frame, we can see here, for example, that once again they once again, it's almost, the best thing you can do is really to trade the weights ratio 1 hour time frame, and that's the best thing you can do, because every time, even if the price goes down, when you are noticing that weights are stopping to send bitcoins to centralized exchanges, okay, it's not that level anymore to sell, and that's where the price starts to go up once again, like it's doing right now. And we received the signal. Let me see. We received it 3 hours ago, and even here that was this morning, 12 hours ago. So usually, okay, they are pushing down, but then afterwards we should go up. We need to see how far, because it didn't decline that much as expected. And we had, for example, here, that was March 18th, you remember, or even here, for example, that was in March 8th. And, the price went up afterwards once again. If we take a look now here, for example, we can see that the weights ratio 30 hours moving average once again went almost to 88, and there is where the price started to decline, while at the same time the stablecoin reserves on centralized exchanges is declining while people are cashing out and exiting. So let us go forward. So if we take a look here, for example, let me check. Yeah, I need to go a little bit more down. We see we had here a bigger inflow that was almost 2,800 bitcoins. But that's it. That's mainly it. We had here 800 bitcoins, here 2,000. So nothing have changed. Someone is sending 2,800 bitcoins. 1 hour later, 2,000 bitcoins outflow. However, the price started to decline. Mainly, I think, in my opinion, mainly driven by bots. So it doesn't look like, everything looks at the moment driven by bots. Well, that's another thing. However, so nothing to see here. Let us go forward. So let me refresh just a little bit. Okay, so we received today 2,420 bitcoins more than outflows. In the last 2 weeks, almost 23,000 bitcoins. In the last 7 days, almost 15,000. In the last 30 days, 9,000. You remember, it flipped to green and now it's red again. It was always red, but usually when we received that amount, afterwards the price goes down. You see the density. It's absolutely here more red than here. In my opinion, once again, a signal that they are distributing. They are distributing without to let the price go down too hard. Even here, push up, and a lot of bitcoins received on centralized exchanges. Then we declined a little bit, and then more up. So, even here, it's always the same. It doesn't matter. And of course, the Bitcoin balance on centralized exchanges lifting up more. If we take a look, we have almost 100,000 Bitcoins on centralized exchanges, waiting for whatever they are waiting for. Nobody knows, to be honest. Usually, it was always the same, pushed up, declined, and the price nuked, because At certain level, you can't absorb anymore. You need a lot of money. Now, even at that price range where we are, it takes even more money. Because if you want now to absorb 100,000 Bitcoins at that price, you need, of course, much money than if you absorb 100,000 Bitcoins at that price level. It's almost the double. So you need, without any doubt, much volume, and it's for bulls becoming more and more a problem. Yeah, to make it possible. However, as mentioned so many times, the price is pushing up more and more and more and more. Not with big volume, because we are not receiving any kind of resistance. They are distributing, and distribution is not aggressive. It is what it is. So let us go forward. So if we take a look here, I'm noticing that I still have all my charts here available. I really thought CryptoQuant is going to cut me off, but not yet, it seems. I need to prepare my plan B. However, if we take a look, that's the net flow of stablecoins related to derivative exchanges. You can see we received here more than the funding rate pushed up. I will show you here. So the funding rate pushed up, declined, and pushing up after we receive much more stablecoins than outflows. While the open interest, for example, we can see that here. So, and the leverage ratio is doing well. That's what it's doing, correlating to the open interest. However, open interest did a better work than the leverage ratio. So many gamblers, it seems they capitulated already. So it looks like they are right now pushing up a little bit the funding rate, just going more long. If we take a look here, for example, we see that we are receiving more Bitcoins to derivative exchanges. That's why the net flow here is just positive and green. Even the chart here, it's not indicating the same, but it's just because we received here almost 12,000 Bitcoins and the whole scale changed, and that's the only thing. So if we go forward, we can see yesterday we liquidated almost nothing. 133 Bitcoins in longs and 230 Bitcoins in shorts. So absolutely nothing. We can see here that we almost reached a level of November in open interest, and it started to decline like the leverage ratio, while the funding rate, the aggregated one, is pushing up more. So it's pushing up more and more. That's yeah, at least the result of this interpretation here. So while open interest declined without really to liquidate a lot of I mean, if I take here a look, no, they didn't liquidate a lot of longs and shorts. However, the open interest declining, it seems someone was taking profit. Also leverage ratio declining just before, and the leverage ratio declined just because of April 10th, where we liquidated almost 1,500 Bitcoins in shorts. So high leverage shorts were yeah, they liquidated them. Oh, I need so let me refresh the site. We see that shorts now declining while longs coming up once again, 56 to 44, indicating that people are, like the aggregated funding rate also was showing, they are longing more. On Ethereum looks a little bit different. It's almost the opposite, 46 to 44, indicating they are more on the short side. And Bitfinex, well, once again, they received more longs, 2.7 billion Bitfinex. So let us take a look to Binance liquidation map, and 180 millions also here. It declined a lot. You remember we had 1 billion. That was weeks ago. That was in March. Now we are coming back to what we know, 180 millions. And the biggest liquidation cluster here is at 37.7 for short, and the biggest one in long is here at 28,700, making 180 million. So it looks like that someone is longing almost with high leverage. Wow. No, someone is shorting with high leverage, and wow, we would have here a liquidation cluster of 86 million. That's crazy. That's really crazy. Can I see that here? No. However, we can see that here. So yeah, it's obviously we should go up, hitting 30k, maybe even go a little bit higher, 30,600 or something. That would be something that I would expect here as well. And then we need to see what's going to happen next. Oh, I need credits soon. So let us go forward. So the gags, the gamma exposure, all expirations. We see here that at least 36k should be the magnet, if not even 48k. For the bears, 26k would be amazing, but I mean the scale is crap. Hey, Leviters, please change that, because it's really stupid what you are doing here. Nobody can really get what that means here. I mean, I know what that means, but 7.5, I mean, plus 201, it doesn't make sense. Gamma, well, gamma is always bullish. It's always up without to have any kind of really impact to the price, something that also changed or was different in the past. If we take a look here, we can see once again long put butterfly. We have a premium of 2.6 millions, beer cold spread 4.9 millions. Okay, that's big. Custom strategy 1 million here, and short risk reversal with 250, even 400k is not big. I would say let us just analyze those three here: the top long put butterfly, the beer cold spread, and the custom strategy. And we start with the long put butterfly first. So long put butterfly, beer cold spread, both indicating, yeah, it sounds more neutral to be honest, but we are checking them now. Long put butterfly is here. We have only 6 different positions with a premium that here is extremely big, to be honest. That's really big. And the long put butterfly is a strategy where you can profit from neutral strike price, neutral Bitcoin price action near the strike price of the short put center strike. So it's usually here a very nice trade, because it's a multi-leg. You have 3 different positions here involved, and this center strike is between 27 and 17k, 22k. So they are expecting to see a price to 22k until June, until mid of the year. That's what they are expecting. And if we take a look, for example, they purchased here those puts 27k for 1.57 millions, and instead, and plus those 140k 17k puts, and they sold for $880,000 the puts 22k. Well, solid trade. Someone is really sure that we will see a price of 22k until end of June. It's okay. Let us see if that's going to happen. Beer call spread. The beer call spread, beer call spread is here, and we have also here only all 8 trades, and that's really strange. However, also here to profit from neutral to bearish price action, and usually here to realize the maximum profit, the Bitcoin price has to be at or below the strike price of the short call, means with a lower strike. So what is here the lower strike? If we take a look, let us see what's the biggest. Wow, premium 1. Okay, that's big. We can see they are, yeah, it's not that bearish. They are just saying here we will see a price below 27k until end of June, below 27k, below 26k, below 29k. So yeah, okay, that's nice. The biggest part is here, indeed, this trade here, these two here, and they are, I would say, matching very well to the long put butterfly, indicating, hey, we will see a price hitting 22k or whatever very soon. It wouldn't surprise me, to be honest. It would be at least the first solid correction after such only up price moves. So custom strategy. Wow, 36. Okay, that's crazy. 36. Let me see if we have something big here. It's not the case, it seems. Wow, that's a multi-leg, 4 different positions, and that's usually very hard to say what they are expecting. They both put 27, call 33, they sold, put 30k and call 30k. So they are expecting until beginning of May a price between 27k and 30k. And that's in 3 weeks. 27k, it's not, I mean, yeah, means maintain a little bit what we are doing, going a little bit more down, 27k, then up to 30k, or first 30k, then go down again. I mean, that's, yeah, nothing big, unfortunately. But however, that was the biggest one. Everything else looks very like retail, and in my opinion, not really very interesting. So the best, those two here, bear call spread and long put butterfly, are very interesting. The long put butterfly more than the bear call spread, but both are really very interesting, and both indicating we should go down, hitting 27, 22k, and so on and so forth. So yeah, why not? So the CBD also here indicating down, down, down. BUSD down, but not that down. Once again, Bitcoin collateral down, even futures down. Everything is down at the moment. Everything is indicating like, well, let us sell. So if we go forward, BUSD, of course, as mentioned, Bitfinex. I mean, look what Bitfinex is doing since a while. I mean, it's there absolutely in distribution mode. They pushed out the market, and since we reached the level of 29k, they are only distributing. I mean, 6,250 in negative CVD. It's crazy because it's absolutely the opposite what the market did. Because if we check, they started to distribute here, and if we check, since then, while they were distributing, or at least selling more than buying, the aggregated both almost 600 millions more than they sold. It's not bad. So Bybit also distributing. Coinbase, as usual, only up, only up, only up, only up, and I think the only thing is they triggered really retail FOMO, just the YOLO instinct to push up, and everything is going to be. We don't like banks, so let us buy bitcoins because bitcoins is something safe. Nobody knows who is holding the big part of the bitcoins. Well, MicroStrategy part of it, Grayscale, everything nice guys. They are absolutely nice guys. Of course, much better. And JP Morgan, Goldman Sachs, they are not involved in crypto. Absolutely not. Of course not. Because we all closed our eyes and mouth and ears when Sam had its meeting with Goldman Sachs, and just before we remember Coinbase and JP Morgan and so, but it's just, it's fake news and FUD and BlackRock and whatever. But it is what it is. Yeah. Bitstamp, what should I say? Well, Kraken, very volatile, pushing up, then down again. And yeah, and Gemini also not doing, we are not talking about big volume here anyway. So if we take a look also, for example, here to the stable coins, we can see just in the whole month since the month started, a lot of yellow. You can see that a lot of yellow. The price started and pushed up very hard, even here. While at the same time we are having bigger cash outs at the same time. So, and yeah, you can see there now all the yellows disappeared here a little bit, and now we are seeing some more blues here as well. But those here and that frequency, they are at the moment, at least, we can't see them. So I refresh. We can also see that the supply is declining here on exchanges, and let me check. Can we see that? Oh yeah, the supply outside of centralized exchanges is maintains nothing happening there. Tether at the moment currently very active, and also USDC, for example. We can see BUSD, they are taking profit over and over again, and yeah, that's it. GUSD also taking profit, but nothing big. So if we take a look to the entities, we can see that market maker pushed up while this entity declined. So right now this entity lifting up while the market maker declining. This entity, you remember I have mentioned, they love to make a good deal, so they started to buy cheap. Now they are selling. We are talking about this entity here. You can see what the price did just before. All right. So they started to buy, or their entity, their balance started to lift up here, and then they declined a little bit, pushed up a little bit more, declined, and now pushed up and declined. Oh Jesus! And declined then afterwards. We can see that here very well. But this entity wasn't a key player in the past, so it's very interesting what they did. But I guess because these guys here, the big guys, they unloaded a lot, and maybe these guys are taking over a little bit. That's absolutely not clear. However, retail maintaining its position, pushing up. These guys not doing anything. These guys, as mentioned, declined a lot. These guys and the trend is very clear, is down. This guys is doing the opposite of these guys here, and here nothing happened. So if we take a look now to the count of wallets, we can see they declined a lot, retail. Wow, here as well. This one's declined but now maintaining. This one's pushing up more. This one's pushing up more. This one's pushing up more. This declined a lot because they are reducing their balances. The market maker received more wallets, and that explains why their balances lifted up. And they declined here. Wallets explains why their balances declined, and here nothing happened. So let me check the fund flows of the market maker. And we can actually also activate the others, because we have, for example, these here as well, and these ones. We can see here 840 bitcoins. Well, that's really interesting. Oh, that's really interesting. So weights ratio, wow, it's okay. I mean, here Bitstamp, Gemini, Bitfinex, up. Binance 45, okay, not bad. Coinbase declined a little bit. OKEX as well. Bybit is lifting up, and here the same. So Huobi right now lifting up while Kraken declining, but it was very high. Here funds increasing their balances from, that was mid of March, 688,000 bitcoins, now 5,000 bitcoins more, usually indicating they have more demand. And here, for example, spot right now, so the derivative market is cooling down, and spot step by step pushing up more, so indicating that spot volume is lifting up, and usually also indicating, in my opinion, that the next dump should be front of the door. But I'm absolutely after such a shit rally, it's almost, for me, I'm really my interpretations are my interpretations, but after every time when it was looking very solid that we will go down, having a bigger correction, they pushed up even more. So, it's absolutely impossible then to say, but every time when the spot started to push up was when we started to go down. And also here, for example, now it was here pushing up, we went down a little bit, then more up, and now we will see what's going to happen, because they push up with futures supporting with spot, as mentioned so many times. And that's it. Let us go forward. So on Coinbase, we see we have here a concentration between $31,000 and $32,000. At the same time, the same concentration is between 25 and 26.5. Of course, we have some other orders, a big one at 33, another one at 35, and everything. They are now reinforcing 15K once again, but nothing big, to be honest. So we need to see. Here's the main the local POC. So usually we can go up to 30,300 before. Bitstamp, they absorbed the 29.3, and now they have SL order at 30,600. Here a concentration at 26,000. Binance. On Binance, well, you can see what Binance is doing. All the algos here protecting that area, and at the same time, well, maybe I should go a little bit more up. And you can see here, but however, the next sell orders at 30,500, and the next one would be at 31. Bigger concentration would be here at 23, for example, but we have a lot of orders here, mainly here at the moment, between 29 and 28.5. Binance BUSD, nothing. Bitfinex BTC USD here at 32,000, but also between 31 and 31.5, waiting with a lot of volume. 27.5, yeah, and then to the downside a lot, of course. OKEX spot, nothing. Kraken spot also waiting between 31 and 32. Wow, but they are the last protection here is at 27.6, 28.2 and 29. Bitmax, BTC USD, nothing. Only here waiting at 30,600. So now Bitget derivatives, BTC USD, nothing. BTC USDT, nothing. Binance BTC USDT, look that's exactly the same crap. Really the same crap they are just doing with spot. Just, you know, once again pushing the price up. Now holding it a little bit, but when that's gone, push up. Incredible. So BTC BUSD, nothing. Bitfinex, wow, they triggered almost all their longs here. Look there, look there. Oh, that's so incredible. Oh my god, that's really so crazy. So until 30,000, it seems 30,600 looks very solid at the moment. That's Kraken futures, OKEX futures. Wow, they 30,600, yeah, would make sense, to be honest. And Deribit, and on Deribit they are right now reinforcing 26.4 and at the same time 32,000 at the moment. That's what we can see here, but also here protecting that area 30,800 at the moment. So that's it. So futures demanding more longs, or it seems futures traders demanding more longs. We know that the weights ratio is pushing up. We know that option traders are expecting a bearish price move until mid of the year, hitting 22k. But of course June it's still a, you know, well, exchange walls, yeah, 26, 27, protection 31, 32. So I mean, you remember what I have said about the daily trend line, what I have here. I will show you. And you remember what I said, right? So usually this trend line have a bigger price, or triggers a bigger price move, like this one here as well. And now what happened is we are here. We are really just above of this trend line, and usually it should go more up before then hard down, or if we break this one, it should be hard go down, because that's what this trend line does. It triggers bigger and sharp price moves to the upside and to the downside. To the upside, it didn't yet. It's the question if it's going to happen. But it seems option traders right now flipping a little bit and expecting such kind of, well, I would say 22K. We are talking then about, well, that's 19,000, a trend line. 22K would be here. So until June, end of June, we are here. So I guess something like that, or maintain here a little bit and then go down. Nobody knows. But we are dancing at the moment here around. It looks like a little bit like a retest, and then afterwards, tomorrow, the day after, we should go up. It depends, of course, on many other factors, but yeah, that's what I can see here from the daily. From the 1 hour time frame, I would expect here a bounce at the moment at 29K. So such kind of last candle week before we can go up to 30,200. It's almost where we have our main POC here, our local POC. So it is possible really to go up then afterwards, or directly from here now go a little bit more down, create once again such a double stupid bottom, and then push up to 30,200. Maybe even to create a bull trap indicating, hey, we will go to 31,000. And we have seen between 31,000 and 32,000, we have a lot of volume waiting there as a sell pressure. Of course, they can absorb everything like they did already, but it's also possible that as the market is controlled by few, that's it, that's the peak, and they don't want to let the price go up more. So it would be also possible. Until June, correction hitting 22K would make sense if they really want to maintain the current bullish scenario. Yeah, don't ask me if I'm going to trade. Don't ask me if I'm flipping to bullish, because I have mentioned so many times, I'm, you know, my sentiment as a trader is not driven by any candle or candle formation or volume, or no, it's just much more. And I have said many times, I can make short-term profit here, longing it, shorting it, trading swings, something I like to do, hedging, you know, sometimes hedge with a short for my long or the opposite. But the thing is, for me, it doesn't make any sense to trade that, because of the whole environment have changed. I don't know if I can cash out. I don't know if I can take out the money and send it to my bank or whatever. I did it. My bank just called me and asked me, hey, you received some money from PayPal. Can you tell me a little bit more about that? I said, yeah, of course. It was from crypto, Coinbase, and okay. So it's not going to be easy. I know that many departments and banks, the regulation, compliance, and so on, are right now a little bit under pressure, also related to crypto. So, you know, it is what it is. It was my decision. Of course, sometimes I check some prices and say, oh my God. But it is what it is. Stick to your plan. Because when I do such a step, and it was absolutely not easy for me to make this step, when I do it, I need to be extremely sure that my result, the expected result, will come. It will take maybe more than expected, but it will happen. And I will be on the, on the safe side. And that's always what I do with my wealth. One thing is to generate wealth. The other thing is to maintain the wealth. And my goal is at the moment maintain the wealth. So yeah, trade carefully. We'll see. At the moment, I don't see any solid. I think it makes more sense to go a little bit more up and then to go more down, because they were pushing down very hard and then they stopped exactly here at the trend line. But anyway, if we break this one and we will go down, it will go down hard, hitting almost 26, 25, 7 or something. So I would be careful longing it. I would be careful shorting it, because it's a trend line. This trend line is a magnet for sharp price moves, like this one here. And I would be extremely careful here once again. Big love. See you tomorrow. Your Inspo.